This is Elizabeth Harris, founder and CEO of Resultist Consulting. I'd like to welcome you to a brief tutorial on how to use the Business Growth Profit Calculator. As you'll see when you visit the library or the blog on the Resultist website, the focus is on profitable revenue growth. There are many ways to increase your profits. For example, you could increase your sales or decrease your expenses. But the effects of those changes will be random and sporadic unless you take a thoughtful, well-planned approach to growing your business. This calculator will show you how small, incremental changes in pricing, costs, expenses, and customer turnover can result in large increases in profits. By entering data in the yellow highlighted cells, you can plan the growth of your business profits. To use the calculator, let's start with the yellow cells in the before column. First, enter the average sale price for your product or service. In this case, we'll use $1,000. By the way, this calculator will also work when you're evaluating pricing changes, different lines of business, or new potential products. Next, enter your cost of goods, your variable costs that are directly associated with the average transaction value you've entered above. In this case, we're going to use $720. Next, we're going to enter the number of transactions an average customer makes every year. In this case, we're going to enter 12. They buy from us 12 times a year. And the number of customers that you have now. In this example, we're going to list 500. Then we'll enter the annual overhead expenses we have as a company that are not already covered in our cost of goods. For this example, we'll say that they are $1,250,000. And finally, if there's any additional income or expenses that aren't already included in our calculations, like interest income, we'll enter those here. In this case, we'll use interest income of $1,000 per year. You'll see our current profit before taxes automatically is listed right here. And this calculator updates every time we add additional information to it. Now let's move on to the amount of churn in the after column that we expect to have in our customer base as the result of the pricing changes and expense reduction measures we're thinking of implementing. In this case, we'll anticipate a 10% loss in our customer base and enter a quantity of 50. After we make these changes, we're going to estimate that our interest income is going to remain the same, so we'll enter $1,000 here. Now let's consider the changes you think you can reasonably expect to make to your pricing, cost of goods, and overhead expenses. Remember that we want these changes to be small so that the existing foundations of your business are maintained and yet you still grow your profits. In the change column in the middle, let's enter 1%. When you use the calculator, you'll see that by entering a number in the highlighted change percent cell, the calculator will automatically apply that percentage to your cost of goods, your number of customers, and the overhead that you've listed. The chart on the right will show you graphically how powerful a small change can be if you apply it methodically to all the aspects of your business. After we enter 1% in the highlighted change percent cell, you can see the difference. A 1% change can make a difference of over 29% or $126,000 to your profits. If you have questions or would like to discuss your specific situation, you can reach me by sending me an email, call me, or send me a note through the contact page on this website. I'm happy to help.